Get out now. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, Goldman Sachs has now issued an urgent warning on stocks. And when you see the technicals, the momentum, and especially the machine positioning, which is what we're doing in the server room today, well, we're going to make the case of why you may want to sell stocks too. Plus, we have a sponsor for today's show, a biotech company that's bringing the future of diagnostic technology. And when you see what they're doing, you're going to be outright amazed. Plus, we're going to show you how we think their stock could be traded for a 24% gain. Stay tuned to the end of the show or check out the description or pinned comment for more information. Now, let's head over to Goldman, where we're going to start off with the equity market, then get into the bond market, gold, and the dollar, as we do every Sunday. And here we can see the Goldman Tactical Flow of Funds report telling their subscribers it's time to sell the green again. But many people are wondering why the equity market just can't hold its daily bid. Well, there's a mismatch right now between the mechanical sellers and the corporates. If we try to rally, they give it that. But this is about to change, and quick. And here you can see the estimated global equity position, a systematic macro. You'll notice here that, of course, the market is starting to move lower and the machines are well over positioned to the long side. And this is looking at the CTA, or the trend followers, the volume weighted, and the vol control strategies. They're just really long equities here. And with the market continues to shift lower and momentum continues to move, they're going to be massive sellers, and that's going to drive the market down a whole lot. And here you can see over the next week, global equities, $26 billion to sell. If the market doesn't go anywhere, that's what a flat tape is. If it doesn't move, they're going to be sellers, but still incremental, just tiny buyers in the S&P at about $2 billion. In an up tape, they're still selling global equities, not buying S&P at all. And in a down tape, get this, $81 billion to sell and $13.5 billion of that in the S&P. And remember, we talked about this last week, that we're moving into a period of the market where liquidity is already low. So if you see a bunch of selling emerging, well, that will just drive stocks down a lot, and quick. Over the next month, Goldman estimates in a flat tape they're selling $23 billion of global equities. In an up tape, they're buying $35 billion. But get this, in the down tape, $267 billion of global equities with $79 billion to sell in the S&P. That will move the tape, and a lot. And that's just the CTAs, because on this page, what matters here is volatility as a player on the field and no longer the coach. Vol targeting strategies remain in the 99th percentile length in the past 10 years, which means they are extremely long. They're max long. These things are loaded up with equities, and if the market starts moving down and volatility starts to reemerge, well, they're going to be sellers too. And the risk parities, you're going to see everybody start to move to protect their gains. And that's one of the cases we're making in the show today of why you may want to look at selling some of your positions too. Let's take a look at the TD securities. Over 44.90 to buy, under 44.50 to sell. So again, the buy is just incremental. There's not much left to the upside. All the move then to the downside. Here we can look at Nomura. They're comfortably transitioning us into the CTA trend as the first systematic focus, where we see the CTAs have already incrementally reduced their aggregated global equity exposure by nearly $30 billion over the last 2 weeks. Notably, the short-term models have lost their long signals into this pullback. And of course, we do the same thing. We have our version, our CTA-Timer Pro, which you see here every week. This is our fast algorithm that's designed to mimic more what TD Securities and Nomura does. And this is our longer one. This is more a mimic of what Goldman and a lot of other companies do. And what you can see, our machine positioning is right on spot. It's leading the trend, showing you where the bigger machines are headed. And again, with all our subscriptions, check out the description. They all come with a 30-day money-back guarantee. And CTA-Timer Pro, it's only $30 a month, and you'll know where the machines are going before they get there. So let's take a look at our screen here. We've got momentum is negative on the S&P. The RSI is at 46, so it's moving toward that kind of oversold territory. Not there yet, but it's headed that way. Momentum slowing. The MACD is validating that with a negative cross. Momentum Timer Pro, that report here on the bottom, well, it runs multiple technical signals, smooths them all out, and gives you a one quick and easy signal to look at the 1 month, 3 month, and 6 month window, telling you this thing is not quite maxed out, but pretty close, and running 7 consecutive daily sell signals, telling you momentum is moving down. Back on March 30th, we issued a buy it open at 404.09. We were telling you set your stop loss 432.88. Let's see if the market bounces here, but if not, we want to see you hold on to some of those gains. And next upside target, we've moved that down a little bit, 457. Downside target still around 413.88. Let's head over to the charts now and take a look at what's going on, because CTA-Timer Pro, it told you to come in and buy the S&P. Well, back down in here, and then it told you to buy it here if you missed it, and then it told you to buy it right in here if you missed it. And now it's what we're seeing is it's starting to pull back. We're suggesting that stop loss level, what told you was 432. That's right down in here. That gives you some margin right around this little support level. If stocks come down and hold and bounce, fantastic. If not, you still have a nice gain. We think ultimately the stocks will come down and actually retest this neckline. If that holds and bounces, that's where you want to reposition and come back with those trades. But right now you see momentum clearly slowing on the RSI and the MACD, telling you this isn't a market you want to buy now. It's one you want to cash in some of those gains. And here we can take a look at QQQ, the tech stocks. Momentum also is negative here. RSI is at 41. So remember, we want to see it over 40 and rising. Well, we're seeing it at 41 and slowing. MACD is validating that with a negative cross. Momentum Timer Pro saying, yeah, we've run our signals, 8 consecutive daily sell signals. Wait on this one if you're a subscriber until that starts to reverse down near where we think is actually the downside target at 347. We'll show you that. Keep an eye on it. We have on March 30th, we issued a buy it open at 315.24, saying the stop loss at 359.24. Hold on to some of those gains if you can. Upside target, we've revised that lower to right around 385. And look at our machine positioning. Here you can see on our CTA-Timer Pro, it's leading those other machines, saying, look, this is where they're headed pretty soon if things don't turn. It's already taking on a short position, and it's scaled back on its long positions on the longer, slower algorithm. That is a warning sign of where those TD Securities, Metre, and Goldman, and all those other CTA models are indeed headed. Now, what we're looking for here is our stop loss around 359. That would put you right just down here, giving us a little bit of this move to come back and see if buyers can hold up. If not, our base call then is 347. And even then, I still think we could drop maybe a little lower before we see a reload of positions here. So what we're suggesting is you don't have to close everything out, but take some gains here and put some money back on in cash so you can reload at the next opportunity. You see momentum is clearly slowing. At some point, it's going to get down to oversold territory and create an opportunity. Of course, as you know, we'll cover it on this show when that gets there. Let's take a look at the bond market. Now, no updates from Goldman on this, so we're now focused on this 1 month window. We're now into the 3rd week of this. We can now safely say that machines have now sold out all the way. They're all max short. Everywhere I've looked around, all the data shows max short, mean any material move higher in bond prices or lower in yields, the machines are going to short cover and buy. We've been telling our subscribers of all our reports, this is their next big trade is in the bond market. But if you want to know when our reports are telling you to buy, well, you got to sign up. Again, link in the description below. TD Securities, see, they're maxed out to the short side. They're not sellers anymore. They're only buying now when yields, if 10-year yields fall under 3.95%. How about Metre? They're maxed out to the short side. No signs of them short covering yet. But just remember, because short selling is so risky, these machines are quick to come off of that. That's what we're telling our subscribers is this is your next big trade right now. And let's take a look at what we're going to see in the charts in a moment. Are we seeing potentially this Wyckoff bottom here in bond prices where we're down here? We saw a big move breakthrough support. And are we seeing this start to form in the spring? We will show you. We'll take a look. Well, nothing is certain until we see a move either way. But let's take a look at our broad view of technicals and momentum. We see TLT momentum's, well, clearly negative. We know the price moved down here over the last week or so. RSI's at 35, so now we're sitting at that oversold area where you want to be looking for a change. MACD's got that negative cross. Momentum time approach 12 consecutive daily sell signals, picking up almost a maxed out sell signal on the 1 month window. As the 3 month window's coming down, this is knocking opportunity on the door is coming here. Now, we had on March 20th a buy to open at 106.88. Now, we didn't tell you to put a stop loss, so we're not going to say we did. What we're going to do is show you how to recovery trade this. And even though Friday's closing is at 95.37, because our other trades were up, we just let this one ride. Next upside target's at 99, downside at 94.50. See our machine positioning? It's max short. This is what we're telling our subscribers to watch. When this signal switches, take a position, and then if it rallies, ride it into the upside. Let's take a look at the chart. And what we see for TLT is, of course, that kind of rectangle bottom. It broke down. This is a question we're asking right now. Is this indeed the spring? Is that where it breaks down, kind of rallies up, pulls back, flushes out all the last of the sellers? This is where everyone goes crazy. They're max short. We know speculators and hedge funds and the futures arena are maxed out short in a big way. Now look at this. The RSI bounced off of oversold territory. It's looking to come down and maybe bounce again. The MACD is looking soon to follow and round up and head higher. If that does and it moves, you've got a lot of short covering, making this what we think could be the next big trade. And now let's take a look at gold. Of course, we have buying above 1950, selling below 1900 on the yellow metal. And what do we see here? Momentum still remains negative. The RSI is at 38. MACD's got a negative cross. Momentum time pro, that's at 9 consecutive daily sell signals. Even our CTA, which reversed, drove up the price and found that. And now it's reversing, telling you, hey, it's short on the fast algorithm, selling on the long side. Downside target 173.95. What we think is 1920 on the yellow metal. We'll take a look at that in a moment, but let's first look at GLD. This thing is breaking down. It broke across that 50-day moving average. We've been warning, when you see it cross to the downside of a moving average, and if it reconfirms it on the bottom side and moves lower or rallies up and then fails, well, it's a bearish move. Next target here is definitely the 200-day moving average. Let's take a look at gold futures. We got a target here, 1920. That would be the next area of support. There's probably buyers there. If it fails, though, the next move down, well, that's all the way to 1820. Let's zoom out here a little bit further. There's your next target, is down here in the 1800s. If it breaks there, I know many say it can't happen. We're saying it can, and it probably will. Let's take a look at gold miners. Many people have watched that double top come to fruition. The market's trying to buy it up, but look at this. Our CTA program saying max short on the fast side, and this long side is moving short too. We got 9 consecutive days of sell signals. The RSI is still there at 42. Momentum is slowing. The MACD confirms that. Here's our downside target. You want to look where to take some of those profits and reload. 2662 on GDX. Let's take a quick look here. And here what we can see, that left shoulder, head, right shoulder. Many of you said that's not going to happen. I said, look, you said this is bullish. I said, no, this is going to be bearish. You watch. There it is, 2662. Gets down here. That's where the buyers were at last time. That's where you want to take a shot at this thing. If it doesn't hold there, well, it's going to come down even more. But I still think you can get a nice trade to the upside when prices break down to that level. So keep an eye on it. Put that on your trading screens on your hot list. How about the dollar? Well, we nailed the upside target. We had to call at 28.62, and of course now we're moving that up at 28.72 because Friday's closing was at 28.29. It actually moved almost right at our upside target. We see dollars maxed out to the long side, which we've been telling our subscribers, look at these other currencies. They're probably going to have some opportunity there, as our reports are showing. And here you can see the dollar kind of bounding up into that 200-day moving average, hitting the top zone of this resistance here. If this fails and doesn't hold, UUP is coming down. How about DXY? It's running into resistance here again, perhaps a run at the 200-day moving average. But again, failure ultimately from this pattern tells you the dollar's coming down to 98. That's where the base target is headed. And of course, we can't do any show without an update on platinum. Remember, this is one our CTA report said to buy back on July 13th. It went up briefly and price reversed, is now down to 84.45. So just like TLT, we're going to show you how to do a recovery trade. We got the upside target at the 50-day moving average. It tagged our downside. Look at this. It's max short. So again, we tell our subscribers, when you see this, look for the reversal signal on the fast side. That's where you take a position, throw a stop loss under it. You can see it on Momentum Timer Pro as well. Wait for those dailies to start flipping. That's where you take your position. Let's take a look at a chart here and see what it's telling us. And what you can see here is you got a nice potential double bottom forming. What we're now doing is waiting for our CTA program on Momentum Timer Pro to validate there's a move upside. You'll take a position, you'll dollar cost average out. If it rallies, you can ride that rally up, smooth out those losses. Maybe it breaks up. We've made the case before that once this thing kind of bottoms, it's not unusual for it to get up here in the mid 90s. So that could be what we think as a big potential trade coming for you, another opportunity. So we gave you here several today alone with our biggest call on the bond market. And with that, I'd like you to introduce you to the sponsor for today's show, and that is Metre Medical, and they're traded on the NASDAQ under symbol NMRD. You can check them out. They're creating affordable diagnostic and digital tools. It's going to blow you away with what they're doing. And then their stock, well, that's going to help you a lot too, because we're going to show you how you can trade them to, we think, to a 24% move to the upside. And they've got their Beat technology platform. It's convenient, timely, and painless. They're needle-free. Its patented Beat sensor is applied to the skin via small, unobtrusive patch and measures things, and which is fantastic because it transmits this data to the users and healthcare professionals via your smartphone. And this will allow the technology for medical conditions and chronic diseases to be monitored for better disease management and treatment. And the applications for their technology are huge, including glucose monitoring, temperature monitoring, lactate monitoring, alcohol monitoring, and substance abuse monitoring. And here we can see something that you should be monitoring is their stock price. Well, we can look over the last 2 years and see the thing's been up in the near the $8 range and seen just a series of selling. But there's two things that are interesting to me here. One, we have a tag of the 200-day moving average, not once, but twice, and one on huge volume here. And then look, it's come down and forming a bottom here. You can see the buyers are buying the stock up all the way down here. And this means at some point, the sellers are going to be worked out. And we're going to show you their press release, why they're not likely to see a whole lot of selling anymore. And once this breaks up, we're going to show you our short-term call of a 24% move all the way to a potential bigger move up to the 200-day moving average. Their platform uses precision microsystems-based technology that has taken decades to perfect in academia, and only recent advances in manufacturing have allowed these technologies to be cost-efficiently mass-produced. Metre Medical aims to bring a multitude of products in the diagnostic field to global markets, and this will be combined with world-class digital offerings so that we can play a significant role in the prevention and management of chronic disease conditions. And you can only imagine when their technology gets out, it's going to be a widely adopted. You can see there's a lot of upside potential, not only with this company, but in their stock. One of the great advantages of our product, apart from eliminating the need to draw blood samples or inserting needles or sensors in skin, is that a person can wear the device on whatever day they choose and for however long they choose. This is a unique feature of our device that has vast potential to change the way we manage chronic disease conditions. And one thing we can change is how their stock is likely to bottom out here and go up. And you can see as we zoom in now, I've highlighted these supply zones. So you see these lower two, purple lines. This is where the buyers are at. You see the stocks comes down, hits the zone, buyers show up. Pulls back, buyers show up. The sellers push through. The buyers came in at a lower level, drove it up, and then bought again, driving the stock up here. And now you see sellers are back coming into the supply zone. What we think based on the closing price is 78 cents a share on Friday, with a target of 97 cents to the upside. That would be a 24% move moving between the supply zone. If it breaks out and gets to that 200-day moving average, well, even a bigger bonus, we're saying. In addition to the medical applications, Namara has developed Miboku, a digital healthcare program with a glucose sensor at its heart. We believe Miboku addresses significant mass market opportunity that we could benefit roughly a third to half the population by using a non-invasive glucose sensor to measure and monitor a user's metabolic health score, which is based on glucose tolerance or insulin resistance. This could be a huge deal. And there's future opportunities with their technology to leverage the Beat technology with continuous lactate monitoring, body temperature monitoring, alcohol monitoring, and even drug monitoring. And one thing we also think you should be monitoring is their stock, because if you see, as we zoom in here to the 30-day window, you notice the RSI is moving up. Momentum's building the upside. MACD's got a positive cross, is starting to move higher, suggesting the next move for the stock is to hit this 93-cent level, potentially breaking up to 97. That's our upside target. And if it gets past all these sellers, well, it could go a whole lot higher. And one thing that's going to help put those sellers to rest is this announcement on Friday that Namara has secured a further $6.5 million in non-dilutive funding through a clean debt facility with no warrants or convertible elements from its existing lender. Again, we think there's a lot of upside here. Symbol NMRD, and that's on the NASDAQ. As with any company featured on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.